Congratulations! You're considering home ownership. Let's look at some of the things you should plan for to ensure your American dream becomes a reality. We're going to learn how to compare benefits and the drawbacks of renting versus buying a home, develop a knowledge of the home buying process, understand steps involved in applying for a mortgage, and understand and compare various mortgage types. For many, buying a home is the single most important financial decision they will make in their lifetime. However, the process of being a first-time homeowner can be overwhelming and requires a foundation for basic home buying knowledge. This lesson will provide you with the information on buying a home and where and how to begin the process. After comparing the differences between renting and buying, you will be introduced to a four-step process for home buying. This framework provides activities involved with selecting and purchasing a home, such as should I buy or rent, what type of mortgages should I select, and common questions will be covered, as well as what lenders are looking for when looking at qualifying applicants for home loans. The costs associated with finalizing a real estate purchase or the closing costs will also be discussed. There are many advantages to renting. One of those is ease of mobility. Ease of mobility gives those who are in the middle of transition or who are just starting out the flexibility of moving from one location to another without a long-term commitment. Situations may include going to college, starting a new job that offers opportunities for movement within the United States or abroad, people going through life-changing events such as divorce, or those who are retiring and haven't decided exactly where they would like to retire. Renting a home offers fewer responsibilities than buying a home, such as taxes, maintenance, upkeep, lawn care, pool services, etc. When buying a home, it's very important that you include these costs in your monthly budget. There are many advantages to renting, such as lower initial cost. For example, many landlords offer incentives to get renters into the home. They may give you the first month's rent for free, waive pet deposits, etc. Versus buying a home, which you may have to put a deposit on the home and down payment that may be up to 20% of the cost of the home. This is why it's very important to look at the types of mortgages and their requirements for a down payment when figuring out renting versus buying, which is best for you. Common disadvantages of renting are fewer financial benefits in the form of tax deductions. This may include property tax and interest paid on the home. You should look at your county, state, and federal taxes for the most benefits that you would be able to claim on your taxes. Your lifestyle may be restricted in renting, such as decorating, having pets, and other activities. Legal concerns could be an issue if you break the terms of your lease, so be very important that you understand these terms when signing any legal contracts. On the flip side, with owning a home, you have a lot more freedom in the terms of the things that you can do to your home. Do be sure, however, to check with your local building codes and county and neighborhood associations to understand what you can and cannot do to your home. A common disadvantage to renting also includes the lack of opportunity to build equity in your home. But you need to think smart about this. There are pros and cons to both. For example, if you're renting a home, you're not paying a lot for taxes, upkeep, and those kind of considerations. You're not renovating kitchens, maintaining the home, and all that is money. On the flip side, whenever you upgrade a kitchen or a bathroom in your own house, you may be building equity in your home. But there are other things to consider than just decor and structural improvements. Consider the housing market. The housing market across the United States has had some ups and downs in the last couple of years. A lot of people ended up upside down on their loans, or the value of their house decreased by as much as 30 to 40%, making it a very bad investment. But there are things that you can do to make sure that this doesn't happen to you. Consider the area in which you're wanting to buy a house. Is this an up-and-coming neighborhood? Is the community devoted to building the economy? Are there tax incentives to getting new businesses to come in? Are there tax incentives for homeowners so that people are drawn to the area? Is the area kept up well? Think about all those things when you're buying a house, and try to negotiate as low a price as you possibly can. The lower the price versus the fair market value of the home, the more built-in equity you will have on the house. But consider, if you're using any of the equity to remodel the house, that you don't spend so much of your equity or go over the equity in remodeling the house that you outprice your own house against other comp homes in the neighborhood. You want to get that money back, or at least as much of it as you can. A couple of things to consider before you make that final decision of home ownership. What type of housing are you considering? There are many types depending on your situation and lifestyle. There's single-family homes, townhouses, condos, investment property, where you may buy 2 units, perhaps rent out one, and you live in the other to help pay for your mortgage, and other opportunities for growth and development. You also consider hidden fees when purchasing a home. Most condos and townhouses require homeowners association fees to maintain the grounds and offer many perks, such as rec rooms, swimming pools, etc. While homes typically don't have homeowners associations except for in gated communities where there are other perks available. The next thing you need to consider is how much can you afford to spend. There's an old rule of 3. Take your annual income, times that by 3, minus your debt, and that's how much home you can afford. For example, you make $50,000 a year. So times that by 3 is $150,000. You have $20,000 in debt. This includes your student loans, credit cards, and your automobile. So take the $20,000 from the $150,000, and you're left with $130,000 to purchase a home. You also need to have some cash savings on hand for the down payment. Depending on what kind of mortgage you get, you may be required as little as 3% down on purchasing a home, up to 20%. But this is a discussion you can talk with your realtor and your banker to determine what opportunities are the best for you. Congratulations, you've decided to buy a home. So next, let's talk about location, location, location. We've always heard those are 3 L's of buying any real estate. Where do you want to live? Are you a city dweller? Do you like to be near the shops, the restaurants, the happenings in the middle of town? Or you prefer the quiet life of the suburbs? Bigger yard, more house? Do you work from home or do you commute? If you do work from home, then it probably doesn't matter where you live. But if you live out in the burbs and your office is in the city, is that a sacrifice you're willing to give up for perhaps a bigger house? And again, also consider the economy. Whether it's downtown or whether it's out in the suburbs, is the community sound? Is it safe? What does it offer in terms of growth potential? Is it a desirable neighborhood? These are all things to think about when you try to narrow down where it is you want to live. Now that you've decided where you want to live, it's time for you, your realtor, and banker to do a little bit of homework. Find out what kind of community incentive programs and builder incentive programs the areas are offering to help homeowners purchase homes. These incentives can be many, from assistance with down payments to package deals on appliances to property tax deferments and homeowner association deferments. You need to look at all of these benefits as part of the monetary financial package and see what's best for you. Let's talk about the disadvantages of buying a house while the disadvantages of renting are fresh in your mind. There are financial risks related to having a down payment. How much are you prepared to put down on a home? Perhaps you've been saving for 2 or 3 years and you have a substantial down payment for purchasing a home. Many mortgages offer incentives to lower your down payment risk. Perhaps you only need to put 3% of the price of the home down, but then again, you may be required to do 20%. Have a discussion with your banker and find out just what mortgages that you qualify for. There are a lot of incentive programs for local communities, the VA, FHA, conventional, and even community block home programs that may offer you an easier route to home ownership. Another disadvantage to buying a home may simply be timing. There may be a low inventory of homes for sale in your area, or perhaps there's a lot of them for sale, but not exactly what you've been looking for. Or perhaps you don't want to move during the school year. So timing is crucial. When you go get approved for a mortgage, you only have a certain amount of time once that mortgage has been approved without having to go through the entire approval process again. Some banks limit this to 30 days, some to 60 days, and some to 90 days. Check with your banker to find out what length of time you have to purchase a home. The last part of the negotiation with the seller comes after the home inspection. If the home inspection is good, the price that you've already agreed on is the price, and it's time to go to the bank and sign the papers. However, if the home inspection came back with some surprises that you were unaware of, you need to consider the cost of how much it would take to fix those repairs. Go back with the seller with a list of these repairs and ask them to fix these things, or give you a discount on the selling price of the house so that you may fix them. It may be required for these things to be fixed before the mortgage can go through. Check with your banker on what their requirements are for giving you a loan. Different loans are much more specific about what has to be done to a home before it can be approved and what kind of condition the home has to be in. For example, the VA loan is a very strict lender when it comes to the condition of the home before it can be purchased. So if you're working with VA loans, make sure that it's completely brought up to code before you go to your lender. Let's back up for a minute and talk about negotiation. You've already offered a price on the home that you're comfortable with, but let's use a couple different scenarios before you actually got to that point. First off, many homes are priced at the fair market value. Pretty straightforward. You make an offer, you go back and forth, you make counter offer, and then the house is sold. But there are situations in which the homeowner may price the home unusually low because they have other financial obligations or personal obligations that they want to get out from under the house quickly. That's a great benefit for you. However, some homeowners will price their home really low in competitive markets to produce a bidding war. You may be bidding against 3 or 4 different buyers at the same time. Consider that even though you've fallen in love with the house, that you look at this from a financial outlook and not from an emotional standpoint. Are you willing to walk away from the house if it becomes so overpriced in the bidding war that you're not going to have any equity left in the house for you to do the things that you want to do with the house or to make it a sound investment? Be prepared to walk away. Your realtor should advise you through this process and should be looking out for your best interest. But be clear with your realtor that you're not willing to overpay for a home just because you're emotionally attached to it. A good realtor will understand this and help you make the best decisions.